Today, we will observe A+ masterclass level setups, talk about how to find specific trade entries. Of course, we will keep using our best indicator with our best momentum-based scalping strategy. There are so many subjects to discuss today. If you are ready, shall we begin? Let's talk about Solana and what was happening recently. We will also discuss how to use our indicator more efficiently. Just stay tuned. Solana was in this massive rally from $100 to $180 in the last couple of weeks. In this weekly chart, you can notice it reacted to this nice imbalance zone. Probably our next target is the above weekly imbalance, however, it has a long way to go for the moment. What I wanna do is talk about the daily charts more, because it is quite interesting. As you can see, the overall structure is bullish with this Solana coin. It is very obvious to all price action traders. But notice this. Check these equal highs right below the imbalance on the left. This was our first target. I was watching this for days. The hunt happened right here, in this daily imbalance with the push upwards. Let me show you what really happened. The daily chart gave us a very clear target above with a combination of imbalance and liquidity as equal highs. And the most recent action was actually quite bullish as well. Finally, it hunted this epic target. So, we are still quite bullish as overall structure, but price needed more fuel to push even further up. This is why it had a significant crash before the $30 rally. Also notice how the price reacts to the EQ point. The Fibonacci 0.5 midpoints are great for reactions if it is supported with other price action concepts. If we just get closer here, check this out. A clear swing failure pattern, followed by strong breaks one after another. So now we need to check the momentum with our lovely indicator. If you use the lovely ICT high time frame candles indicator, finding entry locations is not a problem. What we look for is multi-level imbalance points after the deep pullbacks. Notice how perfectly price fills these imbalances in the hourly charts. However, this may not be enough. Supporting this idea with other price action concepts or smart money concepts is much better, like the demand areas such as Rally Base Rally RBR from the free YouTube trading course. So how did it happen? Price rallies, creates a demand base, rallies again, and this is your demand. Then price taps or fails the multi-level imbalance points, which we identify with our lovely indicator. And all these happen at a very special location, support and resistance Philip zone, basically the PDH, previous day high masterclass amplifier. All these give you the A++ location to seek trades. Now let's observe the area and talk in detail from the lower time frames. First, check this triple equal highs above. Such an amazing inner target. So we have more reasons to ride this price upwards. Okay, now we are seeking the entry, checking out the inner structure and looking for a market structure break, a bullish action. Everything is great, but you have a significant problem. You cannot enter the trade or keep missing the entry. How can we solve this problem? We will get into that, do not worry. In this example, our classic entry happens with MSP and imbalance pullback entry. But what if the price never pulls back? Then what? Because you always think this way. The market will always pull back after an MSP. However, that is just a dream. First of all, market owes you nothing. Market does not care about you, and market certainly has not have to pull back. all these are just your imagination. Then what you can do? You just need to get clever and be much smarter. This is where you shine. You use risk and order management techniques. This is the number one thing that you have to master. If you use RR, the classic risk-reward systems, what you need to do is divide your orders into 2 or 3 pieces, each half a risk. First entry, you jump the trade right after MSB with the half risk, and as your second entry, you set a limit order to imbalance location with the other half risk. The idea is a possible further pullback. This is how you master order management. Or you can get back to DCA, the cost averaging methods, like the masterclass YOYO technique, which I teach in the programs. First, you jump to the first cost average entry with the MSP, not waiting for any kind of pullback. Second entry is set to the imbalance, and the third entry is set to the deep liquidity points, because maybe price may crash more and more. Who knows? I do not know, and if I do not know, you do not know. And if you do not know, believe me, nobody else knows. We do not know anything. This is the reality of the trading. Only thing that we can control is our risks and orders. That's it. Okay, friends, another great lesson ends here. Please stay safe and sound. Be ready for the next video. If you have completed the free trading course and feel like you improved your trading skills, but you need more, an extra, a boost, and you want to move to the next level in your trading life, my masterclass is ready for you. You will learn liquidity, inefficiencies, and structure mastery deeply. We will look at forward and reverse trading with momentum super boxes. You will learn how to confirm your entries with magic alignment system. Finally, you will discover a strategy called YOYO Strategy, which will open new doors for you about taking and managing trades. If you are interested, you